Hello everyone, how's it going? In this video, we're going to be talking about Mullen Automotive, trading under the ticker symbol MULN, currently still on the Nasdaq as we speak. So if you like my channel, please like, comment, and subscribe so that you can see more of the same kind of content. We cover many types of stocks and equities, so hopefully there will be at least one or a few that will interest you. So, Mullen recently achieved some pretty interesting wins with regulators, getting the approval of the Federal Electric Vehicle Credit, and at the same time, is it David? Yeah, David Mitchery is trying to fight back regarding the short sellers. However, it doesn't really mean that a company is completely out of the woods just yet. Things still remain uncertain in the short term, as far as the stock being able to list on Nasdaq is concerned. They have yet to reach $1, and at this point, I think the company gave up trying. That's just my personal opinion. About a week ago, I think, they have received a notice from Nasdaq saying, well, you know what? You guys are not really fit for listing on Nasdaq, so maybe it's time to consider the pink sheets. So most ongoing tendencies, like the ongoing sales, the production, the new products, them trying to fight back against the short sellers, they remain with Mullen, and with its massively diluted shareholders base. They also have to deal with the lack of transparency and a significant amount of skepticism that still roam around. Actually, the skepticism may not be something that's like super negative for the company. As far as I'm concerned, I don't think that anyone involved in this case really, have really cared about the fundamentals of Mullen. Right? If we're being honest, nobody here is trying to reap the dividends from Mullen. We're only here for the short-term ride. So this is why I think that Mullen still kind of sort of benefits from the freak of the town kind of like effect, whereby people want to come in because they think that other people are gonna pile in as well. So we shall see how far this will go. Personally, I feel like it certainly has its limits, but at the same time, like the stock's very unique image or the stock's profile still has its relevance. Now let's take a look at the stock's technicals. The trading volume of Mullen is around 60 million recently, compared to the average of 105 million shares. Over the previous 52 weeks period, the price fluctuated between 39 cents and $137.25. This is obviously considering the dilutions. The volume of shares traded tells us how many shares are being bought and sold at any given point in time, and if there's enough liquidity to support a trading strategy. If the float is thin, it will be very easy to influence the stock price, but low liquidity could mean that the demand is limited as well. When we compare the current volume against the average, there might be the possibility for trend reversal or breakthrough if the difference is very large. Like for example, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap for Mullen is currently around $111 million versus the enterprise value of around $17 million. Now, very often, this is the moment that I would say, whoa, it means that Mullen is trading at a huge premium. Well, not necessarily. In this case, it simply means that the enterprise value of Mullen shrunk by a significant margin. And overall, Mullen is a company whose value, and also like the cost and the books, has been dwindling. As we compare the current price to the historical price fluctuations, the stock is 51% higher than the 1-month low, 51% higher than the 3-month low, and 51% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment about where the stock price will likely head next. The implied volatility here is 280% versus a historical volatility of 218%. The put-call volume ratio is currently around 50%. It's normal for many stocks to tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions. The most recent volume of options traded is around 31,000 contracts a day versus the 30-day average of 42,000. In terms of open interest, the most recent volume of open interest is 1 million contracts versus the 30-day average of 1 million contracts. Regarding the shareholder structure, institutional shareholders own about 10% of the current float, likely as a result of short selling and some people who have a very marginal position in like penny stocks. Usually it's better to see some institutional participation when holding a stock long term, because it may offer a layer of stability and a token of reliability. In case of Mullen, I feel like their participation may not have this kind of effect. In fact, we may care less about Mullen's institutional participation at this current stage. It's been so diluted, so, how can I put it, so classified like a meme stock that I'm not convinced that people will necessarily see it that way. The current short interest is around 15% of the total float and 60% of the transactions coming out from the dark pools. Usually, if the short interest is above 15% of the total volume, with a significant portion of the short volume coming out from the dark pools, this could suggest that there are institutional positions taken to short the stock, and that there would be potentials for a short squeeze. Generally speaking, in the world of finance, penny stocks like Mullen are a bit unusual and also intriguing at the same time. Those securities are known for being cheap and get a lot of attention from retail traders or regular people like you and I, but they also tend to have very big price swings. Their movements don't often make fundamental sense. At the moment, a bunch of things are affecting the stock market. One important thing is the interest rate. When central banks raise interest rates, it makes it more expensive to borrow money, and that can slow down the spending by regular people and how to invest. For penny stocks, it might mean that people start to expect less from them or to think less of them, and some might even decide to not take these kinds of big risks for the time being, which can explain why penny stocks, especially the really risky ones like Mullen, have been losing value recently. This situation can also lead to prices going up because of inflation. Some people might want to invest in riskier things like penny stocks to try to make more money than what they're losing because of the rising prices. But this might not always work out, and it doesn't have a big impact on where most of the money the market goes to. Big investors usually wait for prices to drop significantly before they start buying again. Also, there's the possibility of a recession, which makes it trickier to decide if it's a good idea right now to buy shares of a company that's supposed to sell EV cars. Well, no longer supposed to, of course, because Mullen actually sells EV cars, even though just a few of them. Unlike other fancy tech companies like Palantir or even what Rework tried to be, Mullen is seen as a company that makes things and sells them to people. They can't really afford to lose money for too long of a time. Plus, if the economy doesn't do well, fewer people might want to buy EV cars, like the ones Mullen makes, because they tend to be more expensive than the regular cars. Then there's the issue of global problems, like conflicts, trade issues, and other uncertainties. These can shake up the financial markets real good. When that happens, investors often look for safe havens to put their money into, like blue chips, commodities, and government bonds, and they tend to avoid companies like Mullen because of their risk profile. All these factors can make penny stocks like Mullen jump around a lot in price and make people uncertain about when or whether they should be buying them. When interest rates go up, investors might get more careful. High inflation can be a chance for some, but a danger for many. And when there's a talk of recession, investors might choose safer things to invest in. It's just logical and part of human nature. Being honest and open about how a company is doing is also really important, especially for penny stocks. And in this aspect, I would say that Mullen isn't really a reference, unfortunately. Smaller companies often don't have the same rules or the company culture to report everything as transparent as the bigger ones or the more established ones do. Investors usually don't want to mess with penny stocks, especially in the long term, because they're not really clear about what's going on, given the fact that they are already risky. Without clearer information, there's a higher chance of scams, trickery, and market manipulation. The company that gives clear and honest information can really make a big difference in how confident investors feel about trading penny stocks like Mullen, which unfortunately, in addition to all the other problems that it's facing, is not really good at. So my recommendation for Mullen is to either stand on the side because the volatility risk remains very high, or to start buying for the short-term speculation if the risk appetite matches with the profile of Mullen, which is a short-term speculative position for the time being. Now keep in mind that for a stock like Mullen, patience might be even more crucial than for many others. I would recommend to commit between 0.5 to 1% of your portfolio in Mullen overall, and to split the allocation in 20% batches over the next few months, so that you may purchase more in lower retracements.